I think that there is a way out on this one, and it's a dangerous one, and that is for Russia to destroy the dollar, which it can do. Russia could go on a gold standard tomorrow and expose that fiat currency for what it is, and that would be the end of the dollar, and quite quickly too. You can imagine the legion, if you like, of BRICS and Shanghai Cooperation Organization members, their affiliates and associates. We're looking at 60% of the world's population, or nations representing 60% of the world's population, turning against the dollar in one swift move. It will be the end of the dollar. It will be the end of every dependent currency, fiat currency. Unless...
Wait a minute, everyone. We all agree that the crypto market never sleeps, but with countless newsletters out there, how do you choose the best one for you? BitcoinZella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to BitcoinZella today and enjoy the new edge. Let's join Fred Krueger in this video about those topics and more.
America is behaving exactly as the good general, Greek general of all those millennia ago was predicting. They are just refusing to let go, and if anything, they are likely to accelerate the move towards war. And I think Russia and China, thank goodness, are being pretty patient about how they deal with this. So this is not good, and it is quite possible that we are heading towards all-out war. I mean, when I see, France, for example, and also in this country now talking about it more openly, putting troops on the ground in the Ukraine. This is a provocation which really brings NATO directly into conflict with Russia. And it's difficult to see how you can have that without actually a formal declaration of war. So this situation is actually getting a lot worse, and it's getting a lot more tense. I think that there is a way out on this one, and it's a dangerous one, and that is for Russia to destroy the dollar, which it can do. Russia could go on a gold standard tomorrow and expose that fiat currency for what it is, and that would be the end of the dollar, and quite quickly too. You can imagine the legion, if you like, of BRICS and Shanghai Cooperation Organization members, their affiliates and associates. We're looking at 60% of the world's population, or nations representing 60% of the world's population, turning against the dollar in one swift move. It will be the end of the dollar. It will be the end of every dependent currency, fiat currency, unless they are prepared to embrace the gold standard. I really don't see that America is in a position to do that, either intellectually or practically. I've seen it from various sources that it's not being renewed. And this would actually fit in very, very clearly with Saudi Arabia's geopolitical drift away from the West, away from being an ally of America. I mean, she hasn't supplied oil to America for 2 decades, 3 decades now. All their supplies, her major customer is, of course, China. And they've survived, they've signed trade agreements with China, whereby China will pay for a lot of the oil through inward capital investment into various projects, which Mohammed bin Salman has been promoting.
In wider financial markets, European stock indexes dropped as French assets took a beating due to the country's political turmoil. Cautious mood prevailed on Wall Street, with investors pausing after strong gains in the S&P 500 and the Nasdaq indexes. That combination of weaker equities and some interest rate declines in Fed funds futures pricing are reigniting interest in gold, despite the fact that the Federal Reserve has moved the dots at its FOMC meeting, said Bart Mellick, head of commodity strategies at TD Securities. Traders raised their bets to price in about 52 basis points of cuts, or 2 quarter-point cuts, by December end after softer inflation data this week. That was an increase from 37 pips last Friday, when a stronger-than-expected jobs report doused early rate cut hopes, according to LSEG's interest rate probability tool, IRPR. Lower rates tend to boost appeal for non-yielding bullion by making it a more attractive investment, compared with other assets such as Treasury bonds. Data this week showed consumer prices were unchanged in May for the first time in nearly 2 years, while producer prices unexpectedly fell. However, the U.S. Federal Reserve's median dot plot, released after its 2-day policy meeting, where it kept interest rates steady, showed the policymakers projecting just 1 quarter-point cut.
Well, it obviously leads to a stronger dollar measured against those currencies. Now, having said that, I think it is actually unlikely that the ECB would have announced the cut in its deposit rate of 0.25%, which is what last week, unless it had had various conversations with some of their more important opposite numbers in other central banks. And this would encompass maybe a general chat with the Bank of International Settlements. It would certainly include a chat with representatives of the Fed. So the problem I think that all these central bankers have is that even though they haven't managed to get inflation back down to that 2% level, and they daren't sort of turn around and say, well, we're going to change it to 3% or 3.5% or whatever. The problem is that the longer you have rates at this current level, the greater the danger that there will be further problems in the banking sector. And also, don't forget that the vast majority of the US economy, the European economy, Japanese economy have all got used to the sort of rates which have allowed zombies to just take on debt, more debt, more debt, more debt, because it was costing nothing. And if anything, well, you got the opportunity to take on debt, just take on debt. Businesses have been leveraged up, which something that has been undone by higher rates. So the economic consequences of the current level of interest rates are extremely serious, and the Fed will have an eye on this and be very concerned about it. So they've got this problem. How do they deal with it and inflation, the inflation problem at the same time? Now, I think that perhaps, and this is speculation on my part, perhaps a consensus is emerging that, with the US economy turning down, with inflation still continuing, et cetera, perhaps if they can sort of just muscle in a few cuts in interest rates, then consumers won't rush out and buy, sort of just put their money into goods and services and therefore drive up the prices quite so much. Perhaps a result of lower interest rates might end up taking a bit of inflationary pressure out of the steam out of the system. I can see them pushing that sort of argument, but it doesn't actually cut any ice. I mean, the person you want to listen to in America is Jamie Dimon. Dimon makes it quite clear that the outlook is very dangerous. He says he's pessimistic on the economy, and what this means is that the banks from the top downwards are restricting their lending. They cannot, in aggregate, cut their balance sheets. So what they're doing is they've diverted their lending from the private sector. And if you go around America and talk to small and medium-sized businesses and ask them about, the ability to borrow money from the banks, I mean, they will tell you in no uncertain terms, there ain't none. It's almost impossible. Instead, this money is being funneled into short-term T-bills, which has been basically funding the government's deficit. And the government's, you've had, there's a headline, a couple of months back, that the government debt increased by $1 trillion in 90 days. It's a pace that is accelerating. But the reason that it's happening is because all the liquidity in the economy is tending to go away from the private sector into funding government spending, which is non-productive and inflationary. So the inflation dragon is actually still being fueled. On top of that, with the foreigners not buying dollars and at the margin selling, as we've seen with the Chinese central bank, with the People's Bank of China, then that means that the borrowing along the yield curve is going to get increasingly difficult.
The U.S. Securities and Exchange Commission's newest surveillance tool, the Consolidated Audit Trail, has sparked significant concerns among privacy advocates and legal experts, who warn of an unprecedented expansion of government monitoring over financial transactions. Rich Dad Poor Dad author Robert Kiyosaki has urged investors to buy Bitcoin despite the cryptocurrency's high prices. "I become frustrated encouraging people to buy Bitcoin. I receive so many lame excuses," he said, emphasizing that although the current price is high, it is not as high as it will be in the future. Recent data from the International Monetary Fund points to an ongoing decline in the U.S. dollar's share of allocated foreign reserves held by central banks and governments. Economists explain that reserve managers are attracted to non-traditional reserve currencies because they provide diversification and relatively attractive yields, and because they have become increasingly easy to buy, sell, and hold with the development of new digital financial technologies. If you've been with us so far, a big thank you. Don't forget to subscribe for free to Bitcoin Zella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.